From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 14th, 2017. In a moment, we're going to take a look at the GBPUSD, Greater British Pound versus the US dollar for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days, starting here on the AUD-USD, the Australian versus the US dollar. This is a currency pair that we studied yesterday in the live trade room, and we're looking for an opportunity to go short or sell this currency pair on the rally and the resistance. A couple of things on this chart. This is the 4-hour time frame. Black trend line shows us that we have been in a downtrend. The blue circles show us that we have had consistent resistance at the purple shaded area between 75.85 and 7600. Yesterday, we observed the fact that there was this pattern setting up where the market fell and went up into the purple zone, found resistance, eventually turned and went down again. Then it fell and then it went up again back to the purple zone yesterday. And now what we're looking for is that turn lower again, and that's what we have. So we took the short, and you can see the trade going at the bottom of the chart from 75.80. The market never broke the purple zone as expected, and now we're back at the yellow shaded area. The yellow shaded area means that it's time to make another trading decision, either protecting the profit with your stop loss, closing some profit. Of course, that yellow shaded area historically has shown to be support on the left, so we know it's possible that it finds support again here, but we also know that if it can successfully break through that yellow zone, 75.35 or so, we're looking for it to challenge the next support, which is the green shaded area, and of course through there, and that last support we could see it down here into the mid 7400s. Okay, all that means that if you are in it, protect profit and watch the market go lower, for the market to go lower. If you're not in it, you probably don't want to go short right now. On top of support, the risk is that it bounces off of it like the last time we were here. If you're looking to go short, I think it's going to take either a breakdown through the yellow zone or a rally back to the purple zone. And of course, your risk again is that it breaks through the purple zone and goes higher for the Australian dollar. Next, let's move over to the USDJPY, just the opposite actually. Pattern of the trend is the black trend line. Yellow shaded area, black circle shows us support, rally higher inside the black circle on the yellow shaded area. So yesterday we observed the fact that it went up to the pink zone, came back down to the green zone in a similar fashion that it did down here at the yellow zone, bounced off of it, and we're looking for it to go back to the pink zone or higher. Because if you observe the pattern, it hit the green zone, yellow zone, settled out, back to the green zone and higher. So we hit the pink zone, back to the green zone, settled out, and now we're looking for it to go higher. Currently sitting about 30 pips of profit on the trade. Of course, we're protecting the profit. Already moved our stop loss to break even or better, looking to target, of course, the pink shaded area as expected. And then, of course, if we can get a strong dollar move, we'll look for it to break that pink zone and go all the way back up to the blue zone at the top of the chart. And the risk, of course, is that it breaks back under the green shaded area and goes lower. So if you're looking to get into this, obviously I think it needs to go back to the green zone. I mean, it did take another challenge of it down here in the black circle, so it's not out of the question that we even take another turn back to the green zone, find support again, maybe another opportunity to dive into this, challenge the pink zone or higher, and all the while, the risk is the breakdown of the green zone for the US yen. One last trade that we did yesterday was the dollar franc. We took a buy into the yellow zone just above the 100 period moving average and where the red trend line is. That is into the 1.006075 level. So let's zoom it in a little bit here, and you can see where that is right here in the middle of the yellow shaded area. We took the buy at 1.0070. The market went up. We saw over 20 pips of profit, came back down, took us out at break even, and then went right back up to the green shaded area. So we've been in profit and now out of this trade, and you can see the way that worked out. We got into it, settled out for quite a long time. It went up. We saw profit. It came right back down, took us out of the trade at break even, and now it's going back up again. So at least at this point, we're going to stay out of this one, waiting for a new opportunity. And again, always the opportunity to go long is better at the support than it is at the resistance. Let's move on over to the GBPUSD. This currency pair has been in an area that we've been studying. The black box on the left-hand side, you can see orange, purple, blue. We see support at the blue zone. That's important for us today. Support at the blue zone in the black box on the left-hand side of the chart. The black circle in the middle of the chart here shows us support at the blue zone. Why is that important? Because that's where we are right now. So we know that the blue shaded area, 1.2125, 1.2155, is support. We even see it 1, 2, 3, 4 days, the previous 4 days finding support here. So what we need to see is a breakout scenario. I think it's promising right now, this bearish engulfing candle, if you will, right here coming from the purple zone to the blue zone. But I want to be confident. I don't want a false breakout. Let me go back a little bit to that black box on the left hand side. Take a look at this. We saw 1, 2, 3, 4, 5 times where it spiked underneath that 1.2125 level, that blue shaded area in that black box, spiked underneath it and then reversed and went back up. So what's it going to take for us to be confident it's going to go lower? Well, we need a breakout underneath that blue shaded area. Even here, look at this. How many times? 1, 2, 3, 4, 5 days, and look how many times it spiked underneath the blue zone before turning around and going back higher. So we need to be careful that we assume that this is a breakout. We want a real breakout. For me, that is an open and close underneath the blue shaded area. Even if we take it down to the 4-hour time frame, get it back to our current candle, we see that there's no open and close yet underneath that blue shaded area. So that's what I'll look for today. An open and close underneath this blue zone. Even if you just take these last lows around 1.2155, it hasn't opened and closed yet underneath there as well. So we need an open and close underneath it if we're going to have confidence, gain confidence that it's going to go down to the yellow zone, which is into the mid to low 1.2 thousands. The risk, of course, in all of that will be that it gets back above the blue zone and goes back up again. So let's wait for the breakout setup, open and close under the blue zone, and target the yellow zone today for the GBPUSD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.